Welcome to America's Commercial Real Estate Show, your source for market intel, forecast, and strategies. Hello, I'm Michael Bull. Thank you for being with us. Our show today is brought to you by CommercialAgentSuccess.com. It is the incredible broker training that brokers around the country rave about, especially very experienced ones. Check it out at CommercialAgentSuccess.com. They are videos, but you access them immediately from the cloud anytime you want. You can get an individual license for an agent, and they're just extremely valuable and low cost. You can get a team version and show them over and over to your entire team or company. Learn more at CommercialAgentSuccess.com. Well, today we're going to talk about a sector in commercial real estate that I think a lot of us are interested in and curious about in the industry, and that is senior housing. Right, senior housing had taken a hit during COVID, and then a lot of property types, transaction-wise at least, took a hit when the interest rates started spiking up. But what's happening in senior housing now that there's maybe been less new supply in most property types? Let's see if that's happened in senior. And what's happening with demographics, right? We all know the baby boomers are a big group. They're starting to get a little older, but are they really there yet? Are they making an impact? And what are some opportunities out there related to senior housing? Let's find out. Please welcome my guest. It's Ernie Anaya. Ernie is president of the Senior Housing Group with Bull Realty. Ernie, good to see you.
Good to see you, Michael.
Well, thank you. And I think the burning question, first of all, for our audience is related to, transaction volume. As I mentioned in the opening, a lot of property types around the country kind of reduced transaction volume, some cases down 50%. But it seemed to start ticking back up in most every sector when the interest rates started coming down a little bit with the Fed, and then a little bit more increased interest in transactions when the presidential election happened. And then after the first of the year, it seemed to really open up. But how about senior housing? That's what you've been specializing in and doing only for the last 10 years. I know you had a background related to it before. What are you seeing on transaction volume like around the country in the senior housing space?
For the entire sector, last year, they sold $13.2 billion, up from $10.9 billion the year before, which is a 21% increase. Okay. So we have seen that, but you're right. It took a dive with COVID, and then after that, interest rate. But the market seems to be back. The economists are forecasting a very strong 2025, so they expect even bigger numbers this year.
Yeah, well, that's good news for all of us that are involved in transactions and involved in the senior housing. If you don't mind, Ernie, take 60 seconds to tell our audience maybe that some of the audience focuses on other sectors and property types. There's the different types of senior housing properties.
So senior housing is comprised of several elements. So you start with active adult, which is basically multifamily, but restricted by age, either 55 up or 62 years old. Then after that, you get more components applied to. For instance, the next step up will be independent living. So with independent living, you get housekeeping and meals, but no care. After that, the next step will be assisted living. And assisted living is comprised of two ways. One is regular assisted living, and then memory care. So memory care for Alzheimer's and dementia. So in there, you get housekeeping, you get meals, but then you get care. Not medical care, but basically activities of daily living, like dressing, washing, bathing, and things of that nature. Then the next step obviously becomes more of an acuity issue, where now you need medical care. And the next step will be to either go to a skilled nursing facility, and after that, maybe a hospice. So that's basically the gamut of the sector.
Right. And some of these properties that you sell kind of specialize in having multiple opportunities or multiple care levels, right?
Right. So there's a concept called basically CCRC, which is basically continuing care retirement community. So a CCRC could be comprised of independent living, assisted living with memory care, and skilled nursing. There's a new concept now because most people don't like the high labor cost of skilled nursing. It's called micro CCRC, where it's everything but the skilled nursing.
Okay. All right, interesting. So, how are these properties performing? Well, as we mentioned in the opening, they obviously took a hit during COVID. They couldn't really show units. What about now? How are they performing?
So the performance right now, from an occupancy perspective, is beginning to inch back up. So right now for the sector, they're at 87.4% occupancy, which is 30 basis points from last year.
Higher.
Higher.
Okay.
So the same thing and that's for the entire sector. For independent living, is 89%, which is 40 basis points. So it seems that independent living and active adult is actually having more demand, and those are the people that are still driving a car and playing golf and things of that nature.
Mm-hmm.
So the demand there is a little bit higher. Then assisted living and memory care is about 85.8%, which is a 30 basis points
increase
from the year before. And then skilled nursing is about 85.9, which has the highest increase in many years of 60 basis points. Skilled nursing have always been kind of flat, so they're kind of going back up.
What do you see, Ernie, for rental rates and trends there on these senior housing properties?
So the rental rates right now for the sector is averaging $4,958, but that's across
a month,
the entire a month for the entire sector. Independent living is the least cost because you don't have the care component. So the rents there are about $3,065, which is showing an annual increase of 40%, which is significant.
Wow.
And then for assisted living and memory care, it ranges anywhere from $6,000 for assisted living to about $7,000 plus, depending on the market for memory care. And that is a 3.9% increase in rents. And then for skilled nursing, it's $9,500. So skilled nursing is different because it's a component of Medicare and Medicaid. So they have a per diem. So the per diem can range anywhere from $350 to $700 per day. But right now the average is $9,500, and that's a 4.7% increase over the year before. So rents is healthy.
Yeah. What about drug treatment?
So drug treatment right now, this is one of the sectors that is growing the fastest, has a compound growth rate annually of 10%. For private pay, uninsured, the range is anywhere from $15,000 on the low end to $25,000 per month on the high end. So normally it involves a component of detox and then counseling.
Yeah.
So
interesting. And we talked about transaction volume, and of course we talk about rents and occupancy and things like that. Obviously, it's an averaging of all kinds of classes of properties and areas, and every property is different, and of course with cap rates as well. But what are you seeing on cap rates in the senior housing space?
So the senior housing space has become pretty competitive. So it's 6.75 to 7% across the country. So that's pretty healthy.
Yeah, and that's average, right? So
that's an average.
So actually, so some really nice properties are actually a lower cap, and
yeah, so it depends on the facility type, the age of the facility, and the local market.
Yeah.
But that's an average across the country.
Yeah. Now I know you're deep into this property type, and you see all types of operators and ownership groups. And where do you see opportunities for investors in this space today?
So because of the cap rates where they are, and because of interest rates, the biggest opportunity is really for people that are already in the sector, that manage their own facilities and are cash rich, that get put down a significant amount of down payment.
So they have the experience, so they can come in and buy something and maybe operate it more efficiently?
Yes, because there's as you can, as I said earlier, some of the occupancy is still in the high 80s. Years before it used to be in the 90s, right? So right now there's a lot of opportunity for very savvy, very well experienced operators and owners to actually take over a facility that may not be doing very well because maybe management or aging owners and actually make it more productive.
Yeah. I mean, obviously, it's a very hands-on business, right?
Yes.
It's not like a regular real estate investment property, right?
Right. So it's basically a regulated sector, so it requires a license. And you have to have experience. You have to go through a background check, fingerprinting, and all that kind of stuff before you get a license. Plus, you have to have all the policies, procedures, and everything approved by the state.
Yeah.
So it's not an easy process.
Yeah.
But that makes a good sense to buy an existing facility versus starting from scratch.
Yeah. And I've noticed that you've been selling some facilities that are very nice and some of them pretty good size that and not very old that were empty. What happens there?
So what has happened is that sometimes the developer / owner gets into a market that is saturated, and they didn't do a market analysis to determine unmet demand. So basically, unmet demand is determined based on here's a age group, here's the number of people making X, and with housing values over 200,000, net worth of over $1 million, and then it determines the demand. Then you subtract from there the number of units in the market, and that gives you an unmet demand. So if the unmet demand is negative, meaning you have saturation, you're going to bring too much competition into that market. So not only are you going to do poorly, but you're going to make other people in that market also suffer.
Yeah. And I guess with a high amount of service that's involved in these properties, back to what you said earlier, I guess there's also some owners that maybe are getting toward their own retirement age and maybe they're not involved enough in the business, and a new buyer can come in where there's enough demand and really turn the properties around.
Yeah, so basically, most savvy investors and operators rely on market analysis, and they look
like
for
that you do, right?
Yes, like we do here.
Yeah.
But they basically look at opportunities and look at facilities that maybe the management might be aging and not doing as well, or not as involved, or not marketing, but the market is very good, high demographics, high unmet demand, and things of that nature. So that becomes an easy mark for them to make an investment and actually succeed and get a high return.
Yeah, I like your consulting nature of how you run this business. It reminds me, I had a group come to me. They were developing a medical office building, and they went to 3 companies, including us, and said, Michael, what kind of rents can you get? Can you guys lease this up for us? And then once you lease it up, what do you think the sell value and things would be? And they went to 3 or 4 different real estate brokerage firms. We did our analysis and came back to them and said, don't build it. They were like, what? I mean, no, this is not the right market. It's not the right time. I wouldn't build it. And I spoke to them about a year later, and they thanked me so much. They were like, oh my God, Michael, the other company said this is what they do. This is what the value would be. And you told us not to build it, and we didn't, and we escaped a bullet. Thank you very much. So I like how you really consult with folks, whether they're buyers or sellers, and help them understand really what a property can be, how it can be powered, and how it can be used, right? And some of that involves kind of a change in use from to more acute care, right?
Right. So basically, if you go from assisted living to memory care, obviously that's a higher cost or rather rents. So that could be easy. But getting back to your point, you have to look at the demographics. You have to look at the occupancy to make sure that the occupancy is for that market is high. That you have basically the rents are market or significant, not low, and then that your demographics have the adult children, the seniors, and everybody else are making a significant house income, hopefully 90,000 or higher, have a net worth of over $1 million, has a housing value of maybe 200 to 300,000 at a minimum. There might be some places that the housing value might be $1 million. So when you look at that and you look at the unmet demand on top of that, that gives you the sense of whether, hey, I can make a very successful business here. I can increase the amount of care, and go and add memory care and things of that nature to increase the value
all the way
of
up
the property.
to drug treatment, right? All the way
Yeah.
up.
So one of the things that we are seeing right now, especially for the facilities that are not succeeding as well, but they are fairly new and in good markets, is actually a potential conversion to drug treatment. And right now there's a significant appetite. There's 3 major REITs right now, Sabra, Care Trust, and Ventas, which are the top REITs in assisted living, that are making a move into that sector because they see the high rents. When you're charging $15,000 to $20,000 a month, even if you are at 80% occupancy, even if you have 20% margin, when you look at your NOI versus the cap rate, a facility that you just bought for $9.5 million could be worth between 25 and 30 million.
Yeah.
At stabilization.
And you sold several of those. I know that converted.
We sold 4
but
recently. Yes.
Okay, but you have to have the right zoning, right?
So zoning is imperative.
Yeah.
So some already have the zoning. So most assisted living facilities has what is called an office and institutional zoning. So normally in most counties, that zoning would allow for drug treatment or something of that nature. However, you have to be, every county is different. So you have to look at the zoning. And some of the sellers are willing to do rezoning. And we have had good success with several law firms in Atlanta that know rezoning and have done a pretty good job in getting those rezonings passed through everything. And the key is connection with the county commissioners. If you get your county commissioners in your pocket, you're gonna win.
I like it. Let's talk about demographics, Ernie, because everybody realizes the baby boomers are a big group, but the baby boomers aren't really of the age yet. Really, what are demographics telling you about senior housing demand?
I mentioned earlier that the biggest demand right now is for active adults. So those are baby boomers in their 70s or late 60s that are still driving, playing golf, and things of that nature. So the trend is the key of the market is going to be reached about 20 years from now, when all the baby boomers start reaching 80, 85 years old, because that is the main point for assisted living. You normally cannot keep your father or mother at your house because their acuity is such that they need better care 24/7. So at that point, you make that decision to go there. So the opportunity is still there. The issue has been that because of COVID and then the interest rates, some of the developers have kind of eased off. So, but at the same time, there's a mounting demand building up. So the economists feel that maybe this is the year where we'll see more development for assisted living.
Yeah, so new supply has really dropped off, hasn't it?
Correct.
Yeah. And we've seen that in every property type, and I think that's one of the things that we've been sharing with the industry here on our show and at our firm is that especially look at apartments, multifamily, even office and retail. When interest rates started spiking up at historic fast rates, development kind of slowed down and stopped, and now some of those deliveries are kind of finalizing. So like in apartments, we might see rents really go up as the demand and supply and demand changes. So I guess some of that could happen with senior. I guess it's just a little slower process, but
right. So the point is that at the point where the developer feels that they can economically build a new facility, the returns are there, the demand is there. It's basically the economics.
Ernie, can some investors that maybe like to invest in real estate, they're listening to the show, they like the space, they like the sector, and they have the cash and they have the real estate knowledge, but they're not really senior housing. They don't know how to run a facility. Is it possible for them to team with a group that's going to actually operate the property, or to have them kind of operate it as a manager?
So there's different tax on that. Just like in multifamily, there's several companies that basically manage the property for you. They normally charge between 5 and 6% of revenue. Another one is if you're buying a facility that is smaller, so it's more manageable, but the executive director or / administrator is staying, and they run a pretty good ship, so to speak, then you may not need to hire a management firm to do that. You might continue to manage with your executive director, but you have to be kind of like, do your due diligence and make sure that everything is there that you will need.
Okay. But if I have the cash and I have the desire to invest, then I might be able to come to you and say, hey, get me an operator. I'd like to buy some of these. I just don't know anything about the care side. Yeah.
So basically, it's interesting because I wrote a little book called Investing in Assisted Living Facilities. And it gives you kind of like, here's the questions that you should ask yourself. Here's a video on a day in an assisted living facility. And then it talks about, okay, if you don't have the experience, maybe you should, hire a management consulting. There's a lot of, or an operator. There's a lot of people right now in this market that do a good job.
Reminds me of
we can introduce them to it.
That's great. That reminds me of a friend of mine who's a hotel consultant. And I said, look, when somebody comes to you to do their first hotel, tell me how that goes. And he says, well, I spend the first 2 or 3 hours trying to talk them out of it. And then if I can't talk them out of it in the first 2 or 3 hours, then I start to tell them what it's really like, what they need to do. It's like, right. Okay, all right. That makes sense. You got to make sure they're ready for the challenges, right?
Yeah. One of the key though is that if you look at the economy, whether it's good or bad, people are going to age and they're going to need care. So it's more resilient even in a bad market if you're in the right place. So having your analysis of the market is key to success. So.
Right. Ernie, what would you leave our audience to think about for senior housing and moving forward?
Right now, the demand is there. Everybody in their 40s and 50s have aging parents. So they're thinking about that anyway. So if you think about it one step forward, my mom was actually one of the first women ordained an Episcopalian priest, and she was very active, and all of a sudden it hit her. So we had to move really fast and put her into one of those places. So, because of that, I got interested in this sector and I learned a lot about it. So the point is that, it feels good when you're doing something good for the community, while at the same time, you're able to get a significant return and a save. So
I love that.
So that's, that's my point. So.
Yeah, I love that. My mother was the same way. She all of a sudden needed assistance every day, and we found a great place for her, and she's been there for years now, and she absolutely loves it. And when COVID hit, she was there. I felt way more comfortable with her there. She and was very safe there. So it was been a great environment for her, and she really likes it. She doesn't have to cook, she doesn't have to clean, she doesn't have to.
Yeah, it's for females too. It's kind of like going back to college, because there's so many activities, reading clubs, going on trips and things like that. So you get all your friends and stuff like that. So the studies show that by being there, your age goes further. You last longer.
You're more active.
And you're happier.
You're around more people.
Correct.
Right. That helps you age. If you're more active, you're relating to people and talk to them.
Correct.
Well, Ernie, great information. Thank you, sir, for joining us.
Well, thank you for your time.
All right. Thank you for joining us around the country. Please let us know what you think. Are you interested in senior housing? You're looking to buy, sell, develop? What do you think? Thanks for sharing the show. Thanks for connecting with us. Until next week, be sure that you always lead, learn, and laugh. And join us for America's Commercial Real Estate Show. America's Commercial Real Estate Show is brought to you by Bull Realty. For commercial brokerage sales and leasing in the Southeast U.S., contact our show host by email at michael@bullrealty.com. By Commercial Agent Success Strategies, 21 incredible one-hour agent training videos. Learn more at commercialagentsuccess.com. By the 2025 C5 Plus CCIM Global Summit, the premier commercial real estate conference for networking, deal making, and investment. For more information, visit c5summit.realestate. For more podcasts and videos, subscribe and visit creshow.com.